Okay, so welcome everybody to this webinar of business entity options. We have here Kelly from the New Business Community Law Clinic. So the agenda for today is just to be, I'm just going to be doing the welcome remarks and then the presentation. I'll give it up to Kelly to do that. I just wanted to go over a little bit of our programs and services that we have here. So we have technical assistance, that is the one-on-one business consulting. We have the Women's Business Center. We do workshops, webinars as we have that we're doing right now. We have the business incubator. We have networking opportunities. We have monthly meetings, annual events, membership programs, and we also have a CDFI department here. So it's business loans and consumer loans. So our next slide, this is just our contact information. It's our website, our phone number, and then our address. So Kelly, go ahead and take over.
Okay, great. Thank you so much for that. First of all, I'm happy to be here with you all. My name is Kelly Woolfolk. I'm the supervising attorney for Berkeley Law's New Business Community Law Clinic. And in case you don't know, that is a law clinic where we specialize in helping startup entrepreneurs and small businesses with all types of legal aspects for their businesses. So if you want to start an LLC or a nonprofit, you may want some help about getting contracts in place for vendors or contractors, maybe trademarking something. There's lots of different things that we can offer there with regard to supporting you in your business development. I also have on the call today one of our law students, Annie Kim. So Annie, you want to do a quick introduction?
Hi, my name is Annie Kim, and I'm a second year at Berkeley Law School and also participating in this clinic. I'm really excited to be here. Thank you.
Yeah, thank you. So today, as you know, we're going to be talking about entity formation, the different types of entities and how you can get started if you are looking to form an entity here in California. I'm going to go ahead and share my screen and pull up a PowerPoint so I can go over this while we're talking. And please let me know, by the way, the chat function should be working. And I don't really want to share the whole, well, let's do this. Can you Annie, are you able to see like the sidebar, the different, yeah. Okay, so I'm actually going to leave it like this because then I can keep track of which slide we're on. Otherwise it just is a whole big mishmash of slides. Is that okay? Annie, okay. So again, so this is, we're here from Berkeley Law, here virtually. Normally we would be there with you, but this week we are presenting virtually from Berkeley Law School, the New Business Community Law Clinic, to talk about, as I said, business entities and even so it looks like some home business tips. So get into that in just a little bit. First of all, I want to let you know that this is not a substitute for legal advice, although I am a licensed California attorney. I'm really just here to give you some general information about entity formation, and anything you want to do beyond that, we recommend that you do consult with an attorney. You can certainly make office hours, make an appointment for office hours with us. We can talk about how to do that later on. Or Annie, if you want to put, do you know the link in the chat, Annie, you can put that there? How to form, the Eventbrite link? No? Okay, we'll put in the chat later on if you're interested in setting an appointment with us to get more detailed legal advice.
I can put the link for you.
Oh, great. The link would be great in the chat. Thank you.
Of course.
Okay, so now we're just going to get into some aspects of legal entities. And first of all, why you would even want to form an entity. So Annie's going to take over from here for a little bit.
Yeah, hi. So I guess a very basic question before we get into all of this is why should business owners form a legal entity in the first place? And you're right, some people just start off by like providing services or doing business as, and this is fine, but one of the reasons why we do form legal entities is to make sure we have critical legal protections like limited liability, which I'll get into a little bit later, that may be critical for your business.
Right.
Oh, sorry.
Oh, I'm skipped one. I'm
yes,
sorry.
I think you skipped this one.
Yeah,
no, it's okay. It's okay. So these are just some ways that forming a legal entity can help with your business. So legal entities often come with what is called limited liability, which essentially just shields you personally from certain lawsuits. And it also helps you access different resources like loans or investment, and actually proves your status as an independent business. And it also increases your credibility if you form a official legal entity as a small business, which can have long-term benefits for you in the future.
Yeah, I just want to follow up and say, just for those of you who may not know, LLC, which is very common, actually stands for limited liability company. So it's exactly what Annie's talking about. And we'll get into that limited liability in a bit. And also in terms of loans and investment, sometimes investors really just want to see that you are a solid entity as opposed to just a person out there in the world. It gives them more confidence in terms of offering investment. So if you are seeking funding, you may want to consider setting up an LLC. Okay. Go ahead, Annie.
Yeah, so like Kelly said, we talked a little bit about limited liability, which is essentially it separates you and your business and it shields you from personal liability. And if you believe you're engaging in any kind of risky activity, it's recommended that you form an entity with that comes with limited liability. If you don't form an entity, and then you don't get the privilege of having limited liability, which means you have to be extra cautious to get liability insurance. And if you get into a lawsuit and, for instance, like the claim is bigger than the insurance that you essentially got, then the rest may have to be paid by you personally from like the following assets, like your savings and your car and your house. So it's always recommended that you do get limited liability.
Yeah, even if you form the entity, definitely getting liability insurance is a good idea. Yep, good job.
Yep, and these are just some basic options for choosing an entity. So sole proprietorship is where you yourself is like the sole owner of the business, and partnership, which has different kinds like general partnerships and all that, is created when you partner up with someone, one or more persons. And yeah, and I do want to flag that these two entities don't come with limited liability, but the next two, the corporation, which also has different kinds based on factors like taxation and stuff, these do come with limited liability. And LLC, as Kelly mentioned, is as quite literally a limited liability company. And lastly, if you don't make a choice between these legal entities, there is certain presumptions. If you're single or you're as a married couple running a business, it is going to be deemed as a sole proprietorship. Or if you're with two or more persons owning a business, it's going to be a partnership. And again, these two entities don't come with limited liability, so you have to be careful. So how do we choose an entity? You should consider like these very basic factors about governance, like who's making the decisions, tax and like liability, like whether you want it to be shielded from legal liability, and also capital. The considerations that are not that important when you're making this decision is like which entity is the easiest or cheapest or has the least amount of paperwork. These are not going to be considerations that will benefit your business. Yeah.
Yes. Good.
Yes. So related to the factors that I just mentioned, these are just some questions that you should ask yourself. Like for governance, like, do you want to share, or will you yourself make the decisions? And for tax, like should the entity as a whole pay the tax, or do you only want to report income that's passed through? And for liability, do you need limited liability to protect yourself, which we went over, saying that's always a good idea. And lastly, do you need like a vessel for capital providers to pay into? For example, in like context of startups, will the business be seeking venture capital in like the next couple of years? So these are all just like questions that you should ask yourself before you go into making a decision about which entity will best suit the type of business that you will be running.
Great. Okay, so now we're going to break that down a little bit more for you and talk about governance. So as Annie said, there's different types of entities you can form, and they can certainly be managed or governed in different ways. So you can have a single entrepreneur, just be a sole proprietor, or if you're married, you and your spouse would be considered sole proprietors of that business. If you have several entrepreneurs, that would likely be a partnership. And then for more formal types of entities like corporations, you would then be required to have a board of directors. And there's rules around that in terms of how often they meet and what needs to be done. You have to have bylaws, file articles of incorporation with the state, all types of things like that. So most often in our clinic, we are advising people and helping them to do LLCs because it's a lot less formal and really easy to manage, even if you're just a single person. Okay, so now we'll talk about a little bit of taxation. I do want to give a sort of a disclaimer up front that we are not tax lawyers. So we're just going to skim the tax portion. But if you do have significant tax questions, it is highly recommended that you speak with a tax professional, whether it's a CPA, an accountant, a tax attorney, but someone who really knows how to guide you through the taxation process. That being said, generally speaking, at the entity level, so if you're talking about whatever type of company you have, the income, you receive the income through sales or whatever it might be. And then the tax is, there's a tax on the entity itself. So the entity would report and pay its taxes on your net profits. So you take off your expenses and you pay your taxes through your tax return in that way. The owners then also report and pay their taxes through any profit sharing. So if it's a partnership, let's say it's 3 people, you might split the profit 3 ways equally, and then they pay their individual taxes based upon what they receive through that business, as well as, for example, if it's a corporation, you get dividends, you would pay taxes on dividends at whatever that tax rate would be. Okay. And he did mention also that with LLCs, there's something called pass-through taxation. That's actually one of the benefits of an LLC, because rather than having personal income taxes and corporate income taxes, the entity itself, the LLC, is not treated as a taxpayer. So there's no specific taxes, federal taxes, that an LLC would have to pay. So whatever gains, whatever profits that are made through an LLC would pass through to the individuals. So you as a business owner, and you would just claim those benefits or those gains, those profits on your personal income tax, and you would report that gain to the IRS. However, in addition to the federal taxes that you would normally file, California does charge a franchise tax fee. That's just what they call it. I want to talk about that in a minute, because there's actually a benefit that you can receive right now to avoid that franchise tax fee. I'm trying to see if it comes up. Well, let me just mention that now. I don't know if we have a slide on that. So for this tax year, 2023, that we just started, this is the final year in which California has waived the $800 franchise tax fee. So the $800 is a minimum amount of taxes that you would pay to the state every year. And really it's just for the benefit of having the LLC at all, to have that limited liability protection, so that if the company gets sued, only the assets of the company would be made available, not your personal assets. So if you have, $1,000 in your bank account and $1,000 in the company bank account, only the company bank account money could be reached if someone prevails in a lawsuit against you. But anyway, so for this tax year, so it was 2021, 2022, and now 2023, California has waived that $800 fee. So if you have not yet formed an LLC, now's a great time to do it if you're thinking about that, because you would then benefit for all of the year, all the way till December 31st, without having to pay that $800 up front. So that's a nice savings off the top. Okay. Finally, with nonprofits, there is no taxation, which is obviously a great benefit. However, there are certain steps you have to go through to qualify to form a nonprofit that are pretty detailed. For the record, we also offer some training in nonprofit setup, so we could offer that to you at a later date. But in general, those entities do not file, they file a tax return, but it's not taxed as long as you are not going outside of the stated purposes of your entity, of the nonprofit. So if you're a charitable nonprofit, or if you work in education, or any of there's a number of categories that nonprofits can fit into. So if you fit into one of those categories and you remain within that category, you will not be taxed. If, however, it's found that you're doing business in some other way that's for profit, you're going to get taxed and you will lose that nonprofit status. Okay. But also, for the record, there's no profit sharing. All of the profits in a nonprofit have to be reinvested into that business for the purposes that are stated. So whether it's charitable, as I said, or educational, it has to all go back to the nonprofit. Salaries and things are different. That's just considered what people earn from working there. They're not going to work for free. But in terms of other profits, those just get funneled back into the business. Okay, so how do we limit your liability? What does this really mean? As I said, if you have an entity set up, you are shielded from personal liability. So if your company doesn't have enough money, let's say you get sued for $1 million and your business bank account only has, 100,000, all that's available to the person suing would be that 100,000. Now, they could also force you, for example, to sell your assets, like sell the computers, or if you own the building, sell the building potentially. But what they cannot do is reach into your personal bank account or take your house or your car, for example, if those are your personal assets, which is a huge benefit. That's typically why people set up these types of entities. And it's also why the state charges $800. You're paying for the benefit of having that type of protection. Okay, so there's some exceptions down here at the bottom. Personal negligence. So for example, if you run a catering business and you serve food that's no good and people get sick, even though you have an LLC, you can still be liable for negligence for serving, let's say, bad meat or something that makes everybody sick. So, and obviously intentional harm, if you're doing something that's just, inappropriate or even a criminal activity, then obviously the state's not going to protect you in that case. Undercapitalization means that you really didn't have enough money to run violation. So leadership. So in other words, someone who's running the business, the company, if they violate their fiduciary duties, if they violate their responsibility to the company essentially, then you're going to lose that protection as well. So basically, as long as you're operating your business legally and responsibly, you shouldn't have any problem. But there are some red flags just that you should be aware of. Okay, by the way, if you have any questions or anything, you feel free to put something in the chat and we can get back to those a little bit later. All right, so capitalization, what are we talking about? That really is just, where do you get the money to run your business, to start it, to run it? So as you see where to get it, there's all kinds of ways. The founders may come in with, maybe if, like, for example, if Annie and I have a company together, maybe we're each going to put in, $5,000 to start, to just give us some seed money to start to, operate. You can also, of course, ask family and friends. You can do traditional loans like through banks, equity investors who may want to get a percentage of the business by putting in their money. Some agencies offer grants, which is great because you don't have to pay those back. And then the government may also be willing to fund some of your business to get started. There's also things like crowdfunding, like Kickstarter and GoFundMe. So lots of different ways that you can start out. Why do you need capitalization? Well, of course, you've got to start your business up, whether it's like buying computers or getting software, maybe office space, supplies, maybe you need a car to do deliveries, right? There are those kinds of things. Obviously, ongoing expenses, so that could include paying people who work for you, paying a utility bill, just normal things that you would think of, and capital improvements. So maybe you rent a space like for a kitchen, but the oven's no good, or there's a hole in the roof. You want to be able to make sure your business is all set up before you begin to run it. So that's what this capitalization is about. What the balance is, then funds would come from you. Obviously, you don't have to pay yourself back, but it's considered an investment in business. Things like debt means that you don't have to give up control of the business, but you would have to pay it back. And then equity is that you don't have to pay back that money if the business is not successful, but in the event that you are successful, hopefully, that equity investor would then own a portion of that business, maybe 10% or whatever you decide on. Okay, here are some more options for capitalization. It says here that all entities work well with founders' contributions, right? So if it's your business, hopefully you're willing to invest in it. So that's always a good thing. Friends and family can be a good way to go because they may have lower expectations than just an outside investor and maybe let you borrow that money for longer, or may not even want the money back. They're just going to, believe in you and invest in you. Debt is an option. You want to be careful, obviously, what the terms of the debt are, the repayment interest, the length of time for repayment, what happens if you go into default. You want to be careful of things like that. With equity funding, you do want to think about what the investors want. It says here an entity generally won't want to give, an entity to hold their investment won't want to give out, right? So they don't want to give an investment to an individual. That's what we were saying before, that most investors feel much more comfortable when there's a formal entity in place, because they feel like, you've gone through the trouble to set up an LLC and get some type of official status. So there's a little more confidence that investors would have in that case. Profit sharing is a way that you can go, which is just what it sounds like. You earn, $10,000. You're going to share some of that with people who've invested in you. Oftentimes, investors want to be part of making decisions about the company, and that's something you just have to make use good judgment on in terms of like, is this investor someone who's qualified to make a decision? If you're having a food service business and this person has no background in food service, they may not be the best people to make that type of decision. So that's some way that you could negotiate, what their investment enables them to do, what they're entitled to do based upon their investment. Liquidity is just like how much money you have that, is cash that you can get your hands on and use right away. Okay, so certain entities do provide more liquidity than others. An entity that makes major decisions by majority rule, corporations usually, do typically provide more liquidity. And an entity that requires unanimity on major decisions, like a partnership or LLC, is less likely to be liquid. All right. So here we have the most common entities. We've talked about some of them. So for a corporation, up in that top left corner, you will need to have a board of directors. We typically recommend, if you're going to do a corporation, that you have an odd number on your board of directors, and that's simply to break any ties. If there's 2 people voting for something and 2 people voting against it, you've got a problem if you only have 4 people on your board. If you've got a 3-person or 5-person board, then you're not going to run into that problem. So taxing for corporations is at the entity level. So you would pay, the corporation itself would pay taxes. You would also pay the California franchise tax, which is a minimum of $800 a year. It goes up if you make over a certain threshold. And the owners would pay gains on whatever profits they receive. So it's a number of different levels of taxation for a corporation. Nonprofits, as we said, don't pay any tax if they maintain that nonprofit status by not violating any of the rules. There is limited liability for corporations. Capitalization can be from personal funds, debt, shareholders can participate in that. For nonprofits, there's also debt, grants, and donations, right? But you cannot have equity in a nonprofit. All right, so for this middle column, LLCs, entrepreneurs, the owners of the business, the members they're called, are going to be the ones who make the decisions, or perhaps appoint a manager, run the business, make the day-to-day decisions, things like that. For LLCs, you have what's called pass-through taxation. We talked about that a little bit, where the LLC itself is not charged tax other than that $800 franchise fee, but the owners would then account for those gains on their personal income tax. Okay, again, there's limited liability, and for capitalization, it can be any one of the things we've discussed. It can come from your personal accounts, debt, or members may get some equity if you choose to go that route. And finally, sorry, it looks like I'm covering up part of this at the end here, sole proprietors or partnerships. The entrepreneurs themselves would make those decisions. Partnerships can have limited liability, and typically what would happen is that you set up a partnership agreement before you begin to work, which fully outlines who has what responsibility, how much liability is assigned to each partner, because maybe one partner is a silent partner and really isn't operating the business, but is doing the funding. Or maybe someone has more experience in a particular aspect of the business, so they're going to take on more liability. It just depends upon what the conditions of your business are. Again, there is pass-through taxation available for this option. Sole proprietors and active partners would pay self-employment tax. But here's the thing, there's no limited liability. You would be responsible personally, so that if you get sued as a sole proprietor or a partnership, your personal assets, your house, your car, your bank account, all of that is up for grabs in the event that there's a lawsuit. And again, capitalization would come typically from your personal funds, your own pocket, or debt, maybe friends and family would help you there as well. Okay. So those are the most common ones. The least common ones, or newer types of entities, are what's called a benefit corporation or a social purpose corporation. In this case, governance is done by shareholders who elect a board, and the board makes the decisions that are supposed to be in the best interest of the company. The taxation is taxed as an entity, so there would be corporate taxes applied, and the owners would pay personal tax as well on any benefits, any financial benefit that they receive. You do receive limited liability here, so no personal risk to your assets. And the capitalization is the same for profits, C Corps, but the shareholders have to be okay with the dual purpose, right, of doing this, whatever the social benefit is. So it could be, I don't know, you think kind of like charitable things or environmental types of things, maybe. Anything that's just doing some type of good for society or for, I guess, the world at large, you could say. An S corp it's really more about a taxable type of taxation that happens. But anyway, so governance for an S corp are where the excuse me, again, the shareholders elect the board of directors and the board makes the decisions. The board, by the way, is always supposed to make decisions for the benefit of the corporation, not for the shareholders. So that's something you want to be careful of if you do enter into a corporate type of entity situation. Again, there is pass-through taxation, but the owners would pay income tax on their salaries, just like you pay it out of any normal employer type of relationship. And you also have that California franchise tax fee to pay. With an S corp, you do have limited liability, but here's a little bit of a catch. With capitalization, it's the same as with other types of corporations, but the shareholders have to be humans. You can't have an LLC shareholder in an S corp, and they have to have US legal status. So you cannot have an undocumented person participating in an S corp. So you would either have to get that person fully documented or switch to a different type of entity. Cooperatives, gosh, I wish I could, let me change I don't know if you guys can see the whole thing there. All right. So for governance, you have workers. You think about a co-op, like maybe a food co-op where you go in and everybody's participating and they're owners in the business. They also share in the decision-making, like what a board of directors would normally do. The workers are doing that. There's also pass-through taxation. So you don't have taxation of the entity, but the individuals would pay taxes just based upon their personal income tax. There's limited liability here, and the capitalization is the same as for for-profit and C corporations, but with only very limited passive investment possible. So that's typically what we see in our clinic in terms of the type of entities we help people form and manage. So now we'll talk about where you can form. So just as a rule, we only work on businesses that are based out of California. However, you may also do business in other states, but the headquarters of your business would have to be here in California for us to be able to work with you. So generally, the pros are that it's considered that California has relatively low franchise tax fees. Now, $800 may not seem very low, but I guess it depends upon other states where you could incorporate or file for your entity. But we also have a very well-developed corporate code, which is respected by a lot of different investors. However, some of the cons are that for businesses that you want to scale, lots of tech companies and all, those types of investors really do want to see more likely a C corporation, not an LLC. And those are typically formed in Delaware, which you see on the right side of the screen. Delaware is well known for being like the corporate capital of the United States. Very strong and well-developed corporate laws. It is the choice for most publicly traded companies and startups, and they tend to get their filings in very quickly. The cons are that it is more expensive than California, more than that $800 that you would pay here. If you form in Delaware, but you operate in California, you would be subject to pay both states' taxes and follow their laws. So it's expensive, but for some corporations and companies that are doing big business into the millions and even billions of dollars, it's worth it, and it's something that's manageable for them. Okay. So general recommendations, forming an LLC. We tend to stress the benefits, which, as we have said, are limited liability, so that your personal assets are not at stake. LLCs can easily take on capital, meaning you can get investments from friends, family, other types of investors. An LLC can acquire debt, meaning that you can go to a bank as an LLC, not as an individual. And for example, if you defaulted on a loan from a bank as an LLC, only the LLC would be liable. So I could go in as Kelly Woolfolk LLC to, let's say, Bank of America, and if I can't repay that loan in full, Kelly Woolfolk LLC would be responsible, but I as an individual person would not have my credit damaged or what have you as an individual. Now, I'm not encouraging anyone to default on a loan, but I'm just saying that there is some benefit to that in terms of how LLCs can acquire and manage their debt. LLCs also benefit from tax breaks. We've talked about pass-through taxation. So with regular corporations, there's double taxation. You get taxed as a business, as a corporation, and as an individual on the gains, on the profits that you make. With LLCs, you only pay those personal taxes because the taxes what you receive from the company passes through you as the individual. So you just pay the tax one time. Okay. Becoming an LLC does make it easier to compete for contractor jobs. So for example, if you want to be an independent contractor, you can be an LLC and receive contracting jobs. It's a law that's highly contested right now in California, and it has to do with how workers are classified. So whether you're going to try to work as a contractor or you want to hire people to work for you, it's very, very important, especially right now, that you properly classify your workers, whether they're contractors or employees, or even unpaid workers like volunteers. That's another topic we'll have to get into in more detail another time, but just something that you want to flag. If you happen to be undocumented, the LLC will allow you to legally earn money here, even if you don't have the right to work. So it is perfectly fine in California for an undocumented person to be the owner and manager of an LLC. There's no problems with that at all. And if you decide to convert your LLC into a corporation, let's say at some point, it's not a big thing to do. You just fill out a form, file it with the state, pay whatever the fee is, or you could dissolve it altogether and just start up as something else entirely. Okay. So here's some recommendations for you, for further recommendations. I think these are the disadvantages. Well, number one is that $800 franchise tax fee. So even if you don't make any money in your first year or whatever year, you're still going to have to pay that $800. And again, that's just the cost basically of doing business with the state. As I mentioned earlier, this final year, 2023, California is waiving that franchise tax fee in the first year of your doing business. And it is a calendar year. So if you start in February, it's not going to go till next February. It is January through December. So we're still in January. So if you're thinking about an LLC, now's a great time to file. You will also have to pay a gross receipts tax if you earn over $250,000 in a year. Now, if you're earning that much money, good for you, right? You can probably afford to pay the gross receipts tax, but just be aware that in addition to the $800, you'd pay something else for earning over that amount. So all LLC income passes through to the owners. There's no holding back. So everything that gets earned goes directly to you, and you would have to file that in your personal income taxes. Limited liability shield only covers the LLC's obligations. So, for example, if the LLC takes on a loan or a lease, then only the LLC is on the hook. That's what I mentioned a minute ago. So it wouldn't be you personally. And again, you don't want to default anyway. But if it happens, it's the LLC that takes the hit, not you personally. However, as I also mentioned, you would still be responsible and liable for personal negligence. So again, to use that catering example, if you serve bad food and somebody gets sick, they're not going to just sue the LLC. They're going to go after you because basically you should have known better. You should have checked with your vendors or what have you to make sure that that wouldn't happen. Okay. And here we go again with the undocumented persons. Yes, anyone who owns a business, or sorry, anyone can own a business in the US, regardless of your immigration status. So that's great news for a lot of our clients who are undocumented, but can still legally own and operate businesses here in California. People who form entities can legally earn profits, even if they don't have the right to work. The one exception, again, is for S Corp owners, because you have to be a citizen or a legal resident to participate in an S corporation. Being named as a business owner on a public record in corporate articles has no legal consequence. So it's not going to harm you if your name is attached to a business, pardon me, even if you're not documented. Be sure that you describe your profit share status in the entity's formative documents. So when you're filing your LLC, you're going to be required to file some documentation with that. You want to put down very clearly what it is that, what's your part in the business? Are you an owner? Are you an investor? How does that work? If you're undocumented, you cannot be hired or paid employee compensation, right? So you can't be an employee of the company, but you can be an owner. As a business owner, you earn your profit share, not just from your hourly work, but whenever you contribute your know-how. So if you have great technical knowledge or some type of skill, then that can also be a way that you earn a profit. You share in the profits from that. It doesn't have to be like, because you sold X amount of goods or something. You put value on whatever you're bringing to the company. So the note at the bottom says that this only provides a legal way to earn income. It does not provide a path to citizenship. So if you're facing deportation or you know someone who is, it might help to claim at the hearing that the citizen employees may lose their jobs. So in other words, if the business owner is undocumented and is facing deportation, it could help potentially in a deportation hearing to say, hey, look, if this person goes, all these other people who are legal residents here and our citizens are going to be out of their jobs. It's not a guarantee, but it's something for you to be aware of. Okay. And again, if you want to change your entity from, let's say, an LLC to a corporation, you can easily do that by just filing here. There's some links for you, whether it's a California corporation you want to convert to, or even a Delaware corporation, you can convert from a Delaware LLC to a Delaware corporation. Just a matter of filing the correct paperwork, paying whatever the fee is, and making sure that everything is up and running properly that way. Okay, so it's a pretty quick run through, but hopefully that's been helpful. If you have further questions, you can certainly contact us. There's a website here for you to sign up. For you to sign up for office hours. You can email us. We also have an online legal library that you can go to whenever you want and look up things like contracts for, you know, whatever it might be, or if you want to know about, you know, filing or articles of incorporation or an operating agreement that shows what people need to do when they set up an LLC or a partnership agreement, lots of things like that that you can look at your leisure, download documents, all of that. So hopefully that's been helpful. Let me try to find let me stop sharing, get back to people. Okay, so that's all we have. Oh, great, I see lots of things in the chat. Now I can see it. Let's go back and oh my gosh. Okay, let me scroll back up here. Okay, will the slides be shared? Yes, absolutely. I will make sure that the PowerPoint, if it's not already with you guys at Fresno Area Hispanic Foundation, that they have it. You're very welcome. Okay, you'll send the recording. Wonderful. Okay, I registered my business as a sole proprietorship. I'm planning on bringing a partner on board. Okay, I'd like my business partner to be a part of my business and help with decisions, but I'd like to be the main decision maker. Is that something I can do? Yes, it is. Could I change my business from a sole? Absolutely, you can change from a sole proprietorship to an LLC. Sole proprietorship isn't really a formal entity. It's, I mean, we mention it in terms of entities, but you don't have to do anything to be a sole proprietorship. You just start doing business. You know, you might get a business license from your city or your county, but you don't have to file anything with the state to be a sole proprietorship. With an LLC, you do have to file with the state. In fact, I'll put down here in the chat the state website. It's sos.ca.gov. SOS stands for Secretary of State. You can see that in the chat. That's where you would go and you can look up, I think it says under business entities, forming or filing an LLC, something like that. You'll see it when you get there. And it'll just, it's very easy. It just will walk you through the steps about how to file your LLC. I believe it's a $70 fee to start. I will also mention that once you file that initial paperwork and you pay your $70, that's not the end of it. Once the state registers you and sends you back your paperwork with the stamp saying, yep, you're an official LLC now, they're then going to follow up with another document that's called a statement of information. And that's really just like a one-pager that they will ask you to provide. That's more details about like what's your business about, who were the owners, that type of thing. You want to send that back in. I think it's like a $20 fee to file that one. It's not a big deal, doesn't seem like a big deal, but if you fail to file that statement of information within, I believe it's 90 days, you'll get hit with a $250 fine. So you do want to make sure to look out for that statement of information after you receive your LLC registration and get that back to the state within that 90-day period to avoid that fee. Okay, let me make sure I answered your question though about a business partner helping with decisions. Yeah, so there's something when you file an LLC that I highly recommend. It's called an operating agreement. And an operating agreement, you can look at it, you can get one, pull it off of that website called Ollie that I mentioned. Really, it's just an agreement that outlines what the roles and responsibilities of the members, the members of the LLC, who's going to do what. Right? Am I the president? Am I someone who's just going to invest money and then have no type of decision-making authority? Like, what are we doing? Maybe I'm the person who has great accounting skills and that's important for this business, but someone else is going to be the salesperson. You just want to detail all of that in your operating agreement so that it's very clear from the outset who's going to do what. Okay, so if you're going to be the main decision maker, that's what you want to put in that operating agreement. And what does that mean? So for example, another one is like, okay, let's say, you need to buy supplies to run your business. Can anybody buy the supplies? If it's a $5,000 system for something that you need, can I go ahead and spend $5,000 without anybody else's authority? Or let's say maybe anything under $500, sure, your partner can go out and buy the supplies. But if it's over 500, then there has to be agreement on what you're purchasing. Those are kinds of things you want to put in that operating agreement too. Okay. Can you touch on being an employee of the corporation for tax purposes? Sure. So as far as that, I mean, again, I'm not a tax lawyer, but being an employee is going to just require you, well, the corporation, sorry, would provide you with that information, just like a W-2. And so whatever the employee fills out, if they have certain deductions or withholdings, they would fill that out on their W-2, and that would just be determined by, whatever the IRS formula is. I have no idea how that works. I always find those things pretty complicated. But yeah, being an employee of a corporation is just like being another type of employee with regard to that. I don't know if that answers your question, Nicole, but I hope so. If not, you can write another comment or ask. Let's see, what if you want to go from an LLC to a nonprofit? That's a whole different animal. So you would not be able to convert an LLC to a nonprofit. You would want to dissolve your LLC and then start up again as a nonprofit entity, because the rules for becoming a nonprofit are very different. You're going to have to satisfy the criteria set forth by the IRS. As I mentioned, let's say you want to be an educational nonprofit or religious or journalistic. There are certain categories where, again, you'd be exempt from paying taxes. Should you create a new entity? Yes. Yes, that's required. Trying to register for your one-on-one. Sold out. Okay, so with regard to registering for our office hours, we are in the midst of setting up a new system to book appointments. So if it looks like the dates are all sold out, I think you may only be able to go like through mid-February right now. Please drop us an email at the email address. In fact, I'll put my address in the chat here. There's actually a better one. Annie, are you able to see the new business law email address? Let me go back to the PowerPoint 1 second, you guys, so I can give you the right address.
Yes, 1 second.
Can you see the PowerPoint at the very last slide?
Yep, I think I can drop it in the chat.
Yeah, drop that. And also someone's asking about Ollie.
Oh, okay.
Last slide, both of those, please.
Okay.
So, yeah, so don't be dismayed if it looks like you cannot book an appointment. Right now, as I said, we're having some complications because we're switching to a new system. I think like everything through mid-February is probably booked right now. That's just because we're popular, because people like what we do. But you will have the opportunity to book with us. And if you find that you're not able, for whatever reason, still to book, we do office hours before and after we do these sessions with you guys down in Fresno, the Fresno area. In fact, we had one earlier today. It's like 3 office hours you can get into on Fridays. But if for some reason, again, you're having trouble, just email us and we'll make sure to find a time to meet with you. It would always be at least one supervising attorney on the call, and then usually 1 or 2 law students who are also here to learn and to help, practice their skills. So the website, Ollie. Yeah, so you guys see that now. Ollie stands for Online Legal Library for Entrepreneurs. And you have the site right there and also the website to sign up for services. Okay, so I hope that answers your questions. I don't know if there's anything else anybody wanted to go over, but otherwise, that's what we have to offer you today. So thank you so much.
Thank you. Thank you, Kelly and Annie, for your guys' time, and everybody else for joining. Does anybody have any other questions?
No, thank you so much for all the information. It was really helpful.
Great.
What are the times that you guys are usually available for the Fresno members?
So typically we do sessions like this on first and third Fridays. It depends upon the demand. It depends upon kind of what people are looking for. So I would follow up with Fresno to find out what the schedule is, because it does change. And so this time we're doing entity formation. We might do something on like intellectual property another time, like trademarking. But yeah, typically it's first and third Fridays every month. And we have office hours available sometimes before or after these presentations. But for example, we had an office hour at 11 o'clock today or 11:30, and then we might have one at 1 or 2 o'clock. So it just depends on the availability. So I would follow up with Fresno. I know for sure Sandra, the video is a person we normally communicate with, and she handles all that for us beautifully. With regard to other office hours, like if you book yourself, the clinic offers office hours on Mondays and Wednesdays. We do 3 hours each day, so 11 o'clock, 12 o'clock, and 1 o'clock, you can sign up. And typically it's about a 45-minute session, again, with an attorney and a student or a couple of students. And which time we would hear what you are coming to find out about, what legal needs you have, and we'd offer you whatever type of counseling that we can on the call. And then if we needed to do some research or follow up, getting you some resources, we then send you an email within usually about a couple of weeks after the call. Often it's a lot less than that, but we give ourselves about a 2-week window to follow up and share further resources with you. Does that
And I
help?
believe Sandra does have those times. But
Yeah,
I
yeah,
will-
she's great about it. Yeah, but I know you guys are all, it's a great team down there in Fresno. We really appreciate being able to help the people who come to us through you. So thank you for that.
Well, thank you guys.
Okay.
I will go ahead and send out the recordings to the people, I'm sorry, Nicole, and I'm sorry, I don't want to mispronounce your name, but thank you for sending your email. And then Chris, we have your email, so I will be sending that as well, okay?
Thank you.
All
Thanks,
right, well,
everyone.
thank you guys so much and have a good day.
Bye. Have a nice weekend, everybody.
Bye, thank you.